Did you approve?
By the way, guys, his eyes look like this, so he can pay attention to one monitor over here and another monitor over here. This monitor is his TradingView monitor. This monitor is his MetaTrader 4. Right? It's got that 180-degree view. I think we look the same. What's good, everybody? Welcome back to another video. I'm here with my co-host. Where are you going? Where are you going? Alright, that was great. Anyways, I guess he didn't want to be in the video. But what's good, everybody? Welcome back to another video where in today's video we're simply going to be discussing the steps that you have to take to find consistent profitability in your trading, either in this year, next year, whatever the case might be. So I'm gonna try and break this down and simplify this video for you guys as best as I possibly can. Not really overcomplicate too many things, but I'm gonna try and go into as much detail as I possibly can while really keeping everything as simple as possible based off of my last 6-7 years of experience trading in the market. Now, I've traded commodities, I've traded Forex, and I've even traded the indices. And currently, my trading is revolved around indices and trading US 30 and the NASDAQ predominantly. So first things first, before you get educated into whatever you're actually learning how to trade, whether it be stocks, whether it be options, whether it be Forex, whether it be cryptos, commodities, whatever the case might be, is you need to get educated and you need to invest into your own education, whether that be investing a lot of your time, such as just going on Google and looking up free resources, or investing into a course. So first things first, getting right into the video, starting off with number one, is that you need to find a trading style that suits your personality. Some people may be more patient over other people, while some people may have a certain level of patience, and that will determine what your trading strategy could actually be revolved around. Some people are better off as day traders, others are better off as scalpers, others are better off as swing traders. Typically, day traders will hold their trades anywhere between a few minutes to a few hours throughout the day, while scalpers hold their trades for a few seconds to about an hour, I would like to say. So that would be kind of revolved around scalping. And swing traders will typically hold their trades from a few days, and it can even lead up to a few weeks. So one thing that you guys actually have to do is determine how patient you are, how patient you could possibly be. Also, you have to determine how fast it takes you to make decisions, because if you're somebody who's maybe not as patient and maybe you can make decisions a little bit faster for yourself, then maybe scalping is the trading style that suits you. Versus if you're somebody that's a little bit more patient and it may take you a little bit longer to make trading decisions or decisions in general, then maybe swing trading is the route you would like to take. And if you're somebody who you find yourself in the middle, such as myself, then you could definitely look into day trading. Ultimately, trading is a game of trial and error, and you could definitely try out all three and then find what suits you best. With that being said, once you've already identified the type of trader you actually are, we're gonna jump right into it to number two, which is you're gonna have to create your trading plan. So different things that you can actually include into your trading plan is gonna be what assets you're gonna be trading. So if you're gonna be trading either commodities, you're gonna be trading maybe gold, silver. If you're gonna be trading Forex, so GJ, GBP, JPY, Euro USD, whatever the case might be is, or if you're going to be trading indices, either US 30, the NASDAQ, the S&P 500, just whatever assets you're going to be trading, what time you're going to be trading those assets, which I recommend you guys look up what time those assets have the most volume come into that specific market, what time frames you're going to be using, your entries, your exits, and overall what your trading style is going to revolve around. So if you're a day trader, you may look at the 30-minute and the hour time frame. Other things to include in your plan is what type of trades you're going to be taking, whether they're support and resistance trades, Fibonacci retracement trades, moving average trades, whatever the case might be, is you just have to identify what type of trading style you're going to adopt. Like I said, if you're going to either be a day trader, swing trader, scalper, and what type of trading methodology you're going to use, whether you're going to be trading price action, supply and demand, doesn't matter. Just make sure you incorporate that into your plan. Another thing that you want to incorporate into your trading plan is the amount of capital that you plan on actually trading with and the type of risk that you're going to be taking on that specific trading account. Along with the type of risk, you should also set maximum loss rules maximum daily loss rules, and you should also incorporate what type of risk to reward ratios you're trying to look to gain out of the market on a day-to-day basis, just so you can only take trades that will satisfy that portion of your trading plan being de-risked. So we're gonna jump straight into number 3 of what you should be doing on a day-to-day basis to increase your profitability in trading is keeping a trading journal. Now, a trading journal is the most important tool that a trader can have in their toolbox, simply because a trader needs to go back and look at their past data and their past results so they can improve from any mistakes that they may be making looking forward into their future trades. Keeping a trading journal is so important because it allows you to track your statistics as a trader to see the strengths and the weaknesses in your trading methodology. Now, one thing that I've noticed throughout keeping a trading journal is that I'm profitable typically after market open. Any position that I take before the market opens typically ends in drawdown, while positions that I take 15 to 20 minutes after market open typically ends in profit. So just looking at the little details that the trading journal actually tells you is super important to be increasing your profitability. Because if my trading journal is telling me throughout the statistics of, let's call it 100 trades, hey, 70% of your trades that you take before the market actually opens ends in a loss, while hey, 80% of your trades that you take at market open ends in break even, and hey, 80% of trades that you take 20 to 30 minutes after the market open ends in profit, obviously I'm going to start avoiding making those mistakes by taking those trades before market open and actually increasing my profitability just by simply not taking any more trades during market open. And that's just a small example of how these trading journals can actually help you guys increase your profitability. So with a trading journal, you're actually able to hold yourself accountable because you can compare your trading journal results to your trading plan and see if your actual trades are following through with your trading plan and if you're executing on your trading plan and not veering away from your trading plan. Another reason why a trading journal is super important because you could see what type of trades you take that end in profitability ultimately. If you take a trade, let's call it at an area of support, right? And you typically tend to sell after an area of support is broken and you lose 60% of those trades and you have a 40% win rate, versus if you take a, call it break and retest of support, and those trades end in a 70% win rate, then obviously that tells you that you should stop taking those breakout trades that end typically in a 60% loss, so you lose more than you actually win, and you should focus more of your trades and more of your efforts on these 70% break and retest setups that show you win 70% of the time, again increasing your profitability. You're also able to see your average risk to reward, your average win rate, how many trades you take in a day, which again in your trading plan you should be marking off how many trades you should take maximum in a single day. And in your trading journal you can see if you're following and maintaining yourself within your trading plan, or if you're breaking your trading plan and kind of veering outside of that plan and taking more trades than you actually planned on taking or set yourself up to actually take. Now, I can continue to talk about trading journals probably throughout the rest of the video because it's just such an endless topic on how important a trading journal actually is, which if you are a trader, this is just part of the business. Again, you guys have to remember trading is a business and should be treated as one, and having a trading journal is a simple but yet super effective tool that you need to have in your trading arsenal. Throughout the last 6 years of my trading experience, my trading has been super difficult in the times where I wasn't recording my trades, I wasn't looking at my past history, and I simply just wasn't seeking to improve based off of the errors I was making in my trading. Only in the last few years that I've actually incorporated a trading journal into my trading is when I really saw the growth in my trading that really everybody aspires to actually have. So with that being said, I have actually partnered with a technology company to bring you guys TradeKeep. TradeKeep is a fully automated trading journal which gives you guys as a trader the best experience possible by automatically tracking all of your trades and giving you guys the statistics that you actually need to be able to find the weak areas in your trading and improve and increase your profitability ultimately. All you guys have to do for TradeKeep to automatically track all your trades is literally fill out all of the details that TradeKeep asks you after you sign up about your trading plan, so it can make sure that your trading plan and your actual trading are in congruence with your methodology. After that, TradeKeep will simply ask you for your trading credentials, which will then be plugged into the journal, and from there it is 110% automated. With TradeKeep, if you're somebody that enters multiple positions, you can actually manage your positions live directly on TradeKeep, which is super dope. Example, you can literally move all of your positions to break even with the click of one button, move all of your stop losses to a certain price point, and even close all of your positions with literally the click of a button. It is extremely user-friendly, and it probably is honestly one of the best trading journals that I've seen that is fully automated, because there's a lot of trading journals out there online that require you to enter a lot of details manually, but TradeKeep is 110% automated. You guys can link your own personal trading accounts, or you can even link your funded accounts from any funded company, including Leveled Up Society, which if you guys want to check out Leveled Up Society, you can find the link down in the description. But more importantly, TradeKeep is here to help you progress as a journal, and TradeKeep will even give you information and details on how you could possibly increase your profitability as a trader. And one thing about trading that is very difficult is you don't have somebody telling you what you can and shouldn't be doing, versus TradeKeep will literally tell you that you shouldn't be taking any more trades today because you've went over your plan, etc, etc. So TradeKeep is actually going to launch on the 24th, and if you guys want to actually grab this trading journal for yourself, then all you guys simply have to do is go on the TradeKeep website, which I will have a link down in the description. I'll actually even put it right here in the video for you guys. And from there, all you have to do is pay attention to your email throughout the following weeks leading up to the 24th, which is the launch date. So that's going to lead me straight into number 4, which is going to be reviewing your trades. Now, you guys should dedicate a time every single day to go back into the last few days of your trading performance and see what you may be doing wrong. For example, if in your trading plan you state that you're going to sell at resistance because you have a 70% chance of winning, and you're going to buy at support because you have a 75% chance of winning, but you're taking trades in between that support or resistance area, let's just say you're trading a consolidation range that you know only has a 50% chance of winning, then you go back into your journal and ask yourself, well, hey, this is why I took this loss. I didn't follow my trading plan. I was supposed to sell at resistance or buy after that area of resistance broke, or I was supposed to buy at this level of support or sell at this level of resistance if it did break, but I ended up taking a trade in between that support and resistance area, which happened to be a loss. These are all very, very little simple things that can actually help you increase your profitability. Again, I'm not really going to be here in this specific video telling you guys every nitty and gritty detail that you guys should be looking at in your trading journal to look to actually increase your profitability. But at the same time, I do want to make everything very clear, and really the importance of keeping a journal, because ultimately the only way you're really going to grow is if you track your performance and if you look to avoid making those same mistakes that you constantly make in your trading. For example, if you're somebody that tends to be an overtrader, let's say on your trading plan you set to only have 2 trades a day, and you take those 2 trades, and let's say you end the day in green, but you take a third day and that third trade makes you end the day in red, then there you go, you overtraded by a single trade. But breaking those habits and not having that discipline within your trading plan is ultimately what's stunting your growth as a trader. Now we're going to go straight into number 5, which one thing that has always helped me other than the trading journal in my trading is simply focusing on probabilities and focusing on managing risk. Now, in terms of managing risk, there's pretty much 2 sections of risk management, right? You have how much you're risking per trade, and you have risk to reward. Ultimately, for my trading methodology, what suits me is only taking trades where I have a high probability of hitting a 2-to-1 risk to reward ratio. Meaning for every $1,000 that I risk in the market, I'm looking to gain at least $2,000. And that has something that has allowed me to become consistently profitable over a period of time. Because even if I lose 2-3 trades in a row, it'll only take me half of those trades to come back from that losing streak. And a lot of the times my minimum target is a 2-to-1 risk to reward ratio, but there's a lot of times where if you guys go back into my YouTube channel and you look at some of my previous videos, I'll be squeezing out 3, 4, even 5 times my risk on some of these trades. With that being said, now risk management is ultimately up to the trader and the trader's risk tolerance. Some people may consider 1% to be low risk, while others may consider a 1% risk per trade to be high risk. Ultimately, that's something that you have to figure out in your trading. And me, I could be comfortable risking anywhere between 1 to even 7% at times. Ultimately, it just depends on the trade and the probability of that specific trade. Now, when I talk about probabilities is I mainly focus my trades on price action and supply and demand, as you guys can see from my previous YouTube videos. Just go watch the days where I've had 30K days, 40K days, even 100K days. Go watch those breakdowns and you can see that I mainly focus on price action and supply and demand. All of my trades are taken at a supply and demand level because, again, when it comes to a supply and demand level, right, you're gonna have an area where there's gonna be liquidity in those areas, you're gonna have orders in those areas, and you're gonna have a pretty safe area to set your stop loss at, either above or under that area of supply and demand, depending if it's support or depending if it's resistance. Typically, these areas are gonna have the highest probability setups, just because in the past, it's shown us a specific pattern that, hey, when US30 comes to this 30,000 level, we've seen a bounce, and you can make a trading decision off of just seeing that price rejects 30,000. Just a random example there. So to conclude with number 5, the 3 things that you mainly want to focus on to increase your profitability in trading is you want to focus on high probability setups, managing your risk, and ultimately basing your trades off of price action. So I actually wanted this video to be as beginner friendly as possible for those of you guys that are starting out. So a lot of you guys may know this information, but a lot of you guys don't take this information and don't actually incorporate it into your trading, which may be why your growth in trading is stunted. Ultimately, the information that I gave you guys today is not information that is very difficult, but it is information that actually may be overseen or overlooked by somebody who's been trading for quite some time. So if you guys are a little bit more experienced and you visited kind of this beginner friendly video, what I would really focus on, honestly, would be redefining your trading plan if you're not already consistently profitable. Getting a trading journal, whether it be Trade Keep or a trading journal that you make on your own, doesn't matter. It needs to be a daily part of your trading, is recording your trades and reviewing your past performance through your trading journal and focusing on high probability setups while managing your risk at the same time. Now guys, with that being said, again, I didn't want to make this video too complicated. If you guys want a more in-depth video, then just leave us a comment on this video and I'll definitely make a part 2 of this video, which is going a lot more in-depth than what I went over today. And for those of you guys that are interested in Trade Keep, the automated trading journal, all you guys simply have to do is go to the link down in the description, join the wait list, and wait for the launch on October 24th, and you guys will have 100% access to Trade Keep, which I know you guys will love. It was literally made by traders for traders. So with that being said, I hope you guys have a great rest of your day. If you guys want more free trading content, then make sure you guys join the free Telegram with the link down in the description, and I'll see you guys in the next video. Take care, everybody.